The future of banking. Please welcome co-founder and co-chair, U.S. Blockchain Coalition, REU, CEO of Diligence, Pavan Agarwal, investor and board of director at Third Coast Bank, Dennis Bonin, NCUA Vice Chairman, Kyle Hoffman.
All right, well, I'd like to begin with some introductions because not everyone is familiar with everyone up here. And I think we have a really well-educated, experienced group of folks here. So it's going to be a really great introduction. So I'll begin with, I guess, Pavan.
Yes.
Introduce yourself and what are you working on?
Yes, Pavan Agarwal. I'm CEO of SunWest Mortgage and founder of Diligence. And we've created blockchain technology and AI technology that hopes to solve $180 billion annually of trust expense in the real estate trading industry.
Great. And Dennis.
Hi, Dennis Bonin. I founded a community bank, Heritage Bank, then merged in with my good friend Bart Caraway, who you just heard a little about, Third Coast Bank. So collectively, Heritage and Third Coast came together, and enjoy being a member of Third Coast Bank. I was in the Texas House for 24 years, finished my tenure in the House as Speaker of the House, and have been very much enjoyed seeing where blockchain and technology and banking and policy kind of all come together, and are very excited to be a part of an organization like Third Coast. The problem in community banking is there's not often dynamic thinking. And one of the things that's exceptional about Third Coast Bank and Bart Caraway and our leadership team is that we are dynamic thinkers who don't shy away from challenges and are not frightened by things that we don't fully understand on the front end. So glad to be here.
Thank you. And Kyle.
Hey, Kyle Hoffman. Happy to be here. A lot of talk at this thing about regulatory clarity from DC, policymakers. That's what I'm trying to do my little piece in, okay? So if you know what NCUA is, it is the insurer for America's 5,000 credit unions. If you know what FDIC is for banks, we provide the same insurance for America's 5,000 credit unions. We are also the regulator for 3,000 of those 5,000 that are federal charters. The rest are state charter. I know Texas has some great state charters. And just the way it works, I have 3 years left on my term. This job, there's 3 of us that run NCUA. We vote monthly on policy. We're appointed by the President of the United States and then confirmed by the United States Senate for a certain term. So at NCUA, there's just 3 of us. For example, the SEC is 5, but there's 3 of us. I have 3 years left, and my overriding thing is I don't want to see credit unions go the way of Blockbuster Video because their regulator wouldn't let them compete. So I'll leave it there.
Well then, on that note, maybe I'll just start with a question around regulation, especially given the last week's bit of news that have happened. Is innovation dead in a regulated environment?
No.
No?
No.
Why or why not?
Properly regulated, I'm so glad you're here. Properly regulated, in my opinion, in emerging markets, you are not real until there's some acknowledgement by the government of some regulation. And it provides the guardrails and the consumer protections to solidify and justify your industry. Obviously, overregulation can kill innovation. But the reality of it is the regulation helps legitimize and secure your existence. And the truth of it is we need partnerships with our regulators. And I'm glad that Kyle's here showing his interest in that partnership. But the reality of it is the challenges of the last week, without some form of protections coming along, those things can kill an industry. And so thoughtful, collaborative regulation can actually produce significant innovation because it also provides certainty. Someone made, and I'll close with this, someone made a comment at Texas A&M, which maybe you'll take that with a grain of salt, but a Texas A&M economist, I was at a luncheon many years ago, and the economy was in a similar situation as now, and he says, I just wish Congress would pass the worst healthcare bill, the worst budget, the worst this, because guess what? Business knows how to react when they know the rules to the game. Not knowing the regulation, not knowing the rules actually can stymie innovation more than clarity to a regulatory environment.
You're always worried there's about to be a rule coming out.
That's
in
right.
which case, wasted all your time, and you may even get in legal trouble. But yeah, it matters that it's done right. Clarity is the most important thing, but obviously, good clarity is better than bad clarity. Early clarity. I'll tell you this, at our agency, we did something that I'm proud of. Earlier this year in May, we put out broad principles about this new thing, newish, called blockchain, right? Didn't go into use cases. We didn't want to, because if you say you can do A, B, and C, people think you can't do D and E, right? And it was just broad and new, and I made sure in the guidance it said that I'm trying to be like the Pied Piper, because credit unions are kind of the smaller part of the financial system. And I want Silicon Valley and investors and tech people to make cool stuff and partner with credit unions. Credit unions have $2 trillion in assets. That's a lot of money. It's also one division of JP Morgan. So we need to focus on that. And that broad guidance, I'll do a little bipartisan here. So I'm a Republican nominee, right? But that broad principles base, there's this thing exists, it will have uses, we don't know what they are, go forth and experiment. If it doesn't break any other rule, then it doesn't break our rule just because it uses blockchain or distributed ledger or digital assets, right? That's what it said, okay? And in my head, that was based on what I consider the best piece of policymaking out of DC in my lifetime. And this is my personal opinion. 1997, Clinton-Gore administration put principles for this new thing, the internet. They posted on whitehouse.gov 5 principles. Whitehouse.gov itself had only existed for like 2.5 years at that point. And number 1, the private sector shall lead, right? I remember the third one was on no taxes unique to this new thing called the internet. That's why we didn't have to pay sales tax on our online shopping for the first 20 years, Anyway, and you know what happened next, right? America won the internet. It's not even close. We got the most jobs, the most investment, the most headquarters, the highest investment returns, and disruptive technology has downside. That's what the word means. And what I worry about with this new industry is we're going to get all the negative in the long run of disruption, okay? The same way everybody lost their video rental jobs. Canada lost them, Mexico lost them. Nobody, they're all gone everywhere because new technology supplanted it. We lost those jobs too, but we at least got, Netflix headquarters, Hulu, the investors that got in on the early rounds, the employees that had life-changing circumstance because they got stock options and they were employee number 6. We got that upside along with the disruption. So it's the thing that I worry about. Commercial blockchain, I think, is doing well in this country. Even the federal government is using it. Customs and Border Control, it's actually quite useful for that. But anything that involves something that looks like a coin, I do wonder that we may fumble the football on the 1-yard line. And if you don't follow American football, that means you were really close to succeeding. And then you screwed up, okay?
Well, with all due respect to Third Coast Bank, we are way more regulated because we have 50 state jurisdictions. We're an independent mortgage company. 50 state jurisdiction, Freddie Mac, Fannie Mae, Ginnie Mae, CFPB. So, but given all of that regulation and all of these people looking at what we're doing, we're able to innovate and produce dozens of new patents on blockchain and AI technology, and are able to hit at the heart of the problem, which is there's a lack of trust in the front end of the origination process. There's a lack of trust in when two people trade and do commerce with each other, right? The disparate parties that own each other, blockchain solves the problem, right? The one thing that we all humans agree on is that the entry in the blockchain is immutable and it's final. So the integrity of the blockchain is agreed on. And if you can apply that to commerce and something as complex and as large as real estate and mortgages, right, then you can apply it to trading that pen, right? And that's what we've developed. And we made it so simple that you just talk to our AI and it tracks the whole process end to end.
Can you take a step back and just talk about your particular product and your use case so that we have a little more?
Sure. So the use case is like this. There's the mortgage industry, the real estate industry is about $2 trillion a year.
2 trillion?
2 trillion, right? That's the estimate. It was 4 trillion 2 years ago. Now it's 2 trillion. Of that, you can roughly say about 6%, 4 to 6% goes into real estate commissions, and about 3% goes into mortgages. So about 9%, right? Anywhere from 7 to 9% is in this sales process. Okay, well, the sales process, if you really break it down, what it is is the process of gaining trust. It's a process of me giving an earnest money deposit to my realtor that I don't really know. I've never checked his balance sheet, right? And to trust that this realtor is going to close the transaction properly. So that realtor has a big effort to do to gain a consumer's trust, right? And so he spends a lot of time and energy and money marketing himself, saying, I'm worthy of trust. Okay, so if that trust equation is eliminated, right, think how easy the job becomes for the realtor. So this isn't about taking money out of realtors or loan officers, it's just about simplifying the job. And so we can do more transactions and do commerce more efficiently.
And so how are you using this technology, blockchain or distributed ledger technology, to do that?
Okay, so
That's proprietary.
no, actually, it's not proprietary. And any of you can try it out. Go to usemorgan.com, and you can actually order one of these cool shirts and just say, "I want a shirt," and it'll do it for you. So, anyways, the way it works is you go into the technology, and first thing it'll do is it issues an NFT on you. So it basically converts you, the consumer, into an NFT. Okay, and what does that mean? That means that it very rapidly, within hours, gets your information, and no matter how complex it is, if you've a lower credit score, 550, 580 credit score, you've had job gaps, variations in income, all that kind of stuff. In a few hours, it will analyze your personal situation, and it will say, okay, you are eligible for, let's say, a VA financing, 0% down, and it will give you a tradable NFT. Okay, and now that NFT is warranted by my finance company, SunWest, so that you're certain to close. Okay, so that means that when you go and purchase a house, right, you're not trying to explain who you are and show your bank statements and so forth. You have the NFT, your acquisition of that house is as good as cash, or better than cash, because even cash buyers, they show a bank statement and the money, you don't know where it came from, where it's going. Nobody's got the time to do the deep diligence. But if you have an AI that can do the deep diligence in a few hours, right, and convert you into NFT, now you can bid, right? Sellers become bidders of your NFT, and you become lenders, bankers on our network want that NFT as well.
So you're doing the credentialing, the verification, and
Right.
creation of the token. I'm assuming some sort of smart contract is managing this
Yes.
process.
Correct.
Cool.
Correct. So, and all of that, the magic of it is what normally anyone who's done a mortgage loan, you know how long it's taken, take the application, go to underwriting, get more conditions from underwriting, and you never know until it closes whether you're going to close. How many of you have had experiences like that where
When
last minute?
you're taking the property off the market for that time frame too, which is not settling to the seller and the real
Correct.
estate agent.
Correct. And then this process, you can do this before you have a property. The NFT is on you as the buyer, right? So before you go out and buy a house, you can get your own NFT.
In a old day world, it's a pre-approval letter, but it's rock solid. It's far beyond a pre-approval
Yes,
letter.
we call it a true approval. It's because there's a warranty on it.
Well, I legit want to have a further conversation with you. I'm not just saying that because we're here on stage to create content.
I'll
here.
make sure they do.
But credit unions are very mainstream, okay? And they do car loans and mortgages. Home loans, car loans, that's what they do. Over 85% of the entire $2 trillion in assets. Car loan, home loan. What do they both have in common if you're getting a loan? Title is transferred. And if you've ever bought property in this country, I find it bizarre how much I have to pay to ensure that the property I bought actually belonged to the person that sold it. And somebody's not going to come out of the woodwork.
So wait a minute. So you mean the house I recently bought from a couple that bought it in March of this year, and I paid $3,500 to the title company to be told that the title hasn't been disrupted since March to October.
There's a bunch of county records and paper filed, and you saw the country of Colombia is putting their entire nationwide property registry. I don't know how long it's going to take them, but It's also an anti-corruption move.
Correct.
Remember in the financial crisis after the Eurozone issue, Michael Lewis, great writer, the one who was following around SBF.
Well, one of the new things now
Yeah.
is stealing your title to your home.
Yeah. So all these Greek politicians, civil servants who could be bribed, and this is not about Greeks, it was about their system. I don't care if it's Jesus and the apostles. The system they had was going to lead to corruption. Civil servants making, 90 grand a year would have these villas on Greek islands that there's no way they should own, but there was no way to track it. An enterprising reporter couldn't. It was all these individualized things, and you could always just pay the person at the property. Hey, by the way, if anybody, reporter comes snooping, here's some money for you just to make sure it doesn't happen. That's one reason Colombia is doing it. And, I think you guys are solving real problems that are all frictions. I'll say one more thing before I forget that involves my time in Washington. You guys remember the 2010 Haiti earthquake? Former President Clinton and George H.W. Bush did all these ads, for charity. And Americans sent, I don't know, hundreds of millions, billions. As I understand it, it didn't do a lot of good in Haiti. It got chewed up by the people you think it would get chewed up by. And that was my example for having to get money to people quickly in an emergency, safely, securely. And that was my example. But then my country, United States of America, in 2020, had emergency stimulus payments, put food on the table, pay the rent. 88 million of them went out as paper checks in paper envelopes 6 weeks after the CARES Act was passed. First, they did the ACH deposits, if any of you guys got one, because it was the people who had filed in 2018 or 2019. If you hadn't filed in those, they didn't do a direct deposit. They sent paper checks. Remember, this was an emergency. This country, the home of Silicon Valley, most innovative place in the world. And we sent 88 million paper checks in an emergency 6 weeks after they were supposed to be to addresses that by definition are old in the database. And the younger people and the lower income people are the ones who missed out the most because they move the most often. They often rent, they don't own, young immigrants, new immigrants to this country moving around. So all these old addresses. So I don't need to use a Caribbean island anymore for an example of a country that failed at the best way to get money to people in emergency. This country did. And there was a lot of talk in the CARES Act when the world was falling apart in COVID, March 2020, about is there a better way? The answer is yes, but our system we don't have time right now to get it. Had there been something like a Facebook DM, remember Facebook's Libra? They abandoned it. But I remember David Marcus from, and I don't care, it doesn't matter what you think about Facebook for my point here. He testified when I worked in Senate banking. And so he's from France, right? He came from Paris in the 90s. And France is a nice place. We don't have refugees from there. It's a pleasant place to live. It's a developed country. But he said, I had to go to America. I had to get better at English. And he came in the 90s because he wanted to work in the internet economy. And he said something that stuck with me. He said, it's really weird right now to see some people saying, I wish I was outside the US to work in the industry, to have the best chance at investment deals, or to be headquartered. That's not what we think this country should. People should want to be here. That's the American way. And anyway, that goes back to my comment about possibly fumbling the football on the 1 yard line and this whole conference's theme on clarity.
Well, wouldn't your solution also, in that example of CARES Act, people got checks who have no idea why they got them and know they absolutely should not have. But your technology could have told the government who was appropriately qualified and who was not.
Multiple dead people got them. And,
right.
And I got word from the banks, printed on it, this is the federal government. If you guys are cynical about it, let me ramp that up a little bit here. So the Social Security Administration, if you ever go to a funeral home, one of the first things they do is notify Social Security, right? Because they don't want deposits to go in. It makes it difficult for the heirs, whatever. So they often, as a service, Social Security finds out who's dead pretty much faster than anybody besides blood relatives, right? But the Social Security code, deceased, was on the digital deposit slips because the IRS records, they filed in 2017, so-and-so paid. So they had it together. The Social Security knew they were dead. Another part of the federal government, Treasury, IRS is part of Treasury, still sent it to them and it said deceased right on there. Left hand not working with right hand, and absolute mayhem. Frantic calls from widows because they got two payments, right? And nobody wants to get in trouble with the government. They didn't. It's not their fault. They're very aware the husband's dead. And what do I do? Am I going to get in trouble? Am I going to get prosecuted?
There was nowhere to return those checks.
Yeah, it was a mess.
Yeah. So the way our technology would solve that problem is you will be owner of your own NFT. It is in your secure wallet, right? So your transactions would be done against your NFT. right? So you control it, it's your data, you control it, right? And the other way you solve the problem is we make it very, very simple, right? It's a conversation, and it uses, automated translation, so it works for every community, whatever language you speak, you can talk to it. So the real test of any technology is, can grandmother use it? Mm-hmm. And my mother, who is a multi-grandmother, right, has many grandchildren, can use it just fine, right? So that's the key, right? Is it simple, right, to go mainstream? And anybody who has a crypto wallet knows it's not so simple. But with this, it dumbs it down to where anyone can have a wallet, a secure digital wallet. You keep your own personal NFT in it, the NFT about you. It's your data, you control it. And then you decide to share it with the government or say, here's my address, give me my money or whatever it is.
Speaking of crypto wallet, can I mention one more thing you should talk to your DC representatives about? My opinion. No member of the federal branch who works on this policy, broadly defined, is allowed to own a single dollar. I don't own a single dollar of Bitcoin or digital assets or anything. I don't own an NFT. So if it feels like people at Treasury or FinCEN don't really understand it, it's because they don't. And so the Congress, the 535 members of Congress, they have their own rules. They generally dissuaded because the press gives us a hard time for owning any. But my point is this: I don't care what people invest in. Office of Government Ethics has, and this is something I have to abide by, has a list of what you can own. Okay, there's a de minimis level. You can work at the FAA and own up to 15 grand worth of United stock. Your spouse can have 25. You can have an airline sector fund with certain things. Nobody in the government ever said no digital assets. It just hasn't been updated. There's a list of what you can own where it's such a small amount that there's not a big conflict of interest, right?
Right.
And so no one at the SEC owns a dollar. No one at Treasury has a digital wallet. And the former director, I went on a Twitter rant on this, and the former director of FinCEN chimed in, I can say it was public on Twitter, and he said, yes, he was trying to get then Secretary Mnuchin to understand what a digital wallet was. They think it's like online banking kind of. Mm-hmm. And he's like, I just want to get the Secretary of Treasury and their staff to just buy and sell $10 of crypto, like just to know how you do it. Right. I can tell you my career in financial policy would be a lot harder if I'd never had a bank account, never had a mutual fund, never had a mortgage, never had a credit card. I mean, you could learn about these things. Imagine the FAA. No one there had ever been to an airport, been on a flight, nor had their children or a spouse, right? So they've never had a boarding pass. They've never been to baggage claim. So I personally think that's an issue. I think the Office of Government Ethics should make the de minimis similar to stocks and mutual funds. That's just my opinion. I think it would help a little bit.
Well, we have an overall problem of financial literacy across the board, across all levels and all ages and all demographics in this country or in the world. And so that's something that we all need to work on. I wear the professor hat some of the time. I am a professor of blockchain at Portland State University. And one of the things that really pains me is when I hear the word blockchain thrown about. Yeah. And I think one thing I'd like to make clear for everybody is there's blockchain and there's distributed ledger technology. Very often when we're talking about use cases in government, in healthcare, in banking, we're talking about private blockchains or more generally like centralized using of blockchain-based technology that leverages pieces or characteristics of blockchain that help coordinate, complicated processes with lots of paper or lots of different people. And there's a lot of good uses for it. I'd say we as an industry need to get comfortable with using the word DLT or distributed ledger technology. It shouldn't be a dirty word. And it'll also help clarify all these conversations that we have with regulators and with investors and with entrepreneurs to be very, very clear about when we're using blockchain versus DLT. Because when you talk about blockchain, that's talking about a permissionless, public, decentralized ledger. And most of these cases that we're talking about are not public, permissionless, decentralized.
Should this event today be called the Texas DLT Council?
Maybe. I mean, it seems like Texas loves Bitcoin and Bitcoin mining, so maybe blockchain is very appropriate because Bitcoin uses blockchain, right? And then
we love all of it.
Yeah.
The idea that we could have used this for the COVID checks and stuff like that. This technology has a lot of opportunities, but if you put garbage into the data processing systems, you're going to get garbage out. Yeah. And so what's really, really important in all of this is having good, strong processes and clean data and ways to manage that, and then you can use the technology, distributed ledger technology, or blockchains to amplify and make it a lot more streamlined. And there's a lot of opportunity.
Well, but I think that's one of the things, that you make a phenomenal point, is that how can you be in an industry or regulated industry but not touch it? And it's one of the things that has been really profound in my experience on the board at Third Coast, is that we are bringing in people who are in the business and those within the bank who aren't, because candidly, from a regulatory side, you really need a great combination of those who have a background and an experience in blockchain, crypto, Bitcoin, what have you. But you then need those who also have to come and learn it from their expertise on the backside. Right. And I think it's been fun to watch that combination of things, because I have a 19-year-old son who's a freshman in college doing engineering. I walked into his bedroom last year as a senior in high school, and I said, I'm sorry, when you got home from school, I couldn't visit. I was on my bank board meeting, and we're having this great visit about blockchain and what have you. And he looks at me and he goes, well, that's something we could talk about. I didn't know you knew anything about it. But it's bringing those connections of those who are in the business. He's not, obviously, but that know those things.
You're so hip, Dad.
Yeah, exactly. I became real hip, and then we actually tried to talk about it. And about 5 minutes in, I lost the hipness really quick. But the reality of it is, you have to bring those both together. And that's one of the things that I think can really catapult this industry, is having traditional banking that embraces the new technologies and marries those expertises together, because the biggest challenge we've seen in the last week is consumer confidence. And I think having a $3, $4, $5, $10 billion existing entity, credit union too, that you have some trust in, that is then partnered intelligently into that business to provide a platform that one of the goals we've talked about is we want a grandmother to be able to buy, as we get to the holiday season, I want a grandmother to be able to go on our platform and buy her grandchildren, a piece of Bitcoin and feel confident that it's safe.
And the concerns over risk are the issue, and risk is what, the risk management business as a regulator. Just so you know, that guidance we put out at NCUA is the reverse kind of what the banking letter said. Now, obviously, I think our approach is right, but FDIC, Fed, OCC on distributed ledger didn't say you can't do it. They said you have to get written notice of non-disapproval from your examiner before you do. Give them a heads up.
It's because they're still scared.
And I get it. None of the employees of any of those agencies that works on this can own a dollar of this. And then people say, aren't you worried if you let them do something? Well, first of all, I'm not their mom. I'm not, they're supposed to be responsible for their, credit union CEOs are responsible for their credit unions. But, the concept of risk, and like, are you worried there's going to be problems? Oh, no, I know there will be.
Right.
Companies go out of business, or you do an investment, it just doesn't return enough
I've bought stocks that didn't get
to justify. I'm like, yes, I know there's going to be problems and new technology. Did you guys know there was 0 plane crashes before we had planes? Not a one. And anyway, but yeah, the use cases are neat. I had a meeting the other day. I called from the center from Tennessee, and I was like trying to figure out Tennessee credit unions, anything going on there? Why do they want to talk to me? Any issues now? You know what it was? Take a guess. Why would the Tennessee center be interested in this? In particular, Tennessee. Nashville, music royalties.
Oh, music.
And all these, music artists, music, country music and stuff. This isn't for Taylor Swift. She's doing fine. It's for all these people who their song is played somewhere and they're not getting their 1 cent or 2 cents. And there's a guy, the senator mentioned, that has 3 Grammys and drives Uber, right? And it's very hard to collect royalties, which I think would be an NFT. I don't pretend to be an expert on that, and that's how it would be done. But the music royalty business. So anyway, I was like, well, that's one I hadn't thought of, and I'm sure there'll be many more.
One last quick question before we close up, because I know we're running out of time. Maybe I'll start with, I'm hearing that physical banks will probably continue, because we maybe want to start with regulation first and then start adding in this digital world into it. So physical banks will continue, but what about physical cash? What do you think?
Well, you're asking a guy who's from a very redneck community where I still have friends that whip out their $100 bills and pay for everything. With that said, I think you will see over time, that diminish and diminish and diminish and diminish and diminish. So will it go away? I don't know if it'll go away, but it will significantly diminish. And by the way, if you gave me a $100 bill today, I could probably return it to you on this stage next year.
Yes, you
I
are.
won't use it. So I'm getting there. But I think there'll still be those who will need it. But it goes back to this issue, and I'll stop with this. It's about building certainty and confidence. If you want to get rid of cash, which I'm not saying you want to be rid of it, but if we want to go that direction, you've got to have confidence and assurance in the alternative.
I'd add to that is you got to make it user friendly.
Yes.
If everyone has a crypto wallet, if you have a crypto wallet that grandmother can use, and even online banking system today, there's the comment. My mom can't use the online banking system, right? But she only knows how to use two things: WhatsApp and email, right? And if you create a system that is easy as that, and getting in and out of your wallet, transferring money is that simple, it will
So
work.
if she was in China, they're using WeChat, similar to WhatsApp, and they're sending money on that.
Right.
I'll say this, when I asked about cash, a lot of people, at least in DC, especially FinCEN, first heard of crypto through illicit actors, Silk Road and all this, and ransom. And they say, isn't it used for illicit purposes? Yeah, but if you think crypto's used often for illicit purposes, you're going to freak out when you hear about cash.
Right.
I'm embarrassed. I had friends who wanted it because they heard it was used for illicit purposes.
As a federal regulator, how do we make sure that the U.S. continues to win in this innovative category?
Well, you had some people here that are champions. I saw Kristen Smith earlier, Blockchain Association. There's a number of them growing.
Senator Cruz.
Yep, Senator Cruz. There's this Chamber of Digital Commerce. They do great work too. There's a bunch of these spring up. This is the DC economy, advocating for people who actually have jobs and make a living. You know, DC is this wonderful, thriving city with great restaurants, but produces nothing of value, right? I bet you don't have a single DC-made app on your phone, right? So that's the DC economy. But yes, advocate for that. And I think on the, again, I'm a Republican, so I have my view, but on the left side of the aisle, progressives, a lot of their aims, I think, can be achieved this way, via this technology. It can help them, and I think that's the focus.
You can
right
lift
there.
people out of poverty with this type of technology.
Yes. Actually, we, the U.S. Blockchain Coalition, represent 40-ish states across the U.S., and we are working on coordinating and using states as the best laboratories for
me make
democracy.
it
You're part of the
quick.
solution, 100%.
One of the most profound things we were doing, again, don't worry about the policy, voter ID. And I chaired the committee. And an African-American gentleman came in and said, I'm not a Republican, I'm not a Democrat. I don't care if you have to have an ID to vote or not, but let me tell you, for my community, you can't get on a plane, you can't open a checking account, you can't do anything. And it was brilliant what he said. He says, if you're telling me the government will give everyone a free ID who can't afford or doesn't know how to get one, if you pass this bill, I'm for it because that's how you raise my community out of poverty.
Some states have that, free ID.
Correct. Well, we do. But I think this is a similar technology that can bring people forward.
Well,
We should wrap.
we're out of time.
We're out of time.
Okay.
Well, thank you everyone for listening. Thank you to the Texas Blockchain Council and Lee Bratcher for putting on this amazing event. And thank you to our awesome
y'all.
panelists.
Keep doing good work.
I'm Lee Bratcher, the president of the Texas Blockchain Council. Thank you to everyone who came out to this year's summit, helping us make it the best one yet. Now more than ever, we need professional industry associations like the TBC to help craft effective policy instead of the CEOs of centralized exchanges roaming the halls of various state capitals or in DC. Texas is quickly becoming the center of the universe for Bitcoin, blockchain, and digital assets. If you want to be part of the future that we are crafting here in Texas, join the TBC today.